Good morning, traders. This is Chris Buss with Trades About to Happen for Wednesday, October 21st. I'm going to do something different this morning. I've put together what I think is a nice list of 9 objective low-risk trade ideas for you to consider. And just to review, what I mean by objective and low risk is what I try to do in my process is find trade locations where there's a well-defined level or line to shoot against, and a location where I can put a stop just above or below, depending on if it's a long or a short setup, where if price violates that line, I am out with a paper cut. You know, if I respect my stop and it gets clipped, I know two things for sure. One, I'm wrong, and 2, I haven't lost a lot of money for trying. So let's go through these and see what you think. Maybe several of them will appeal to you and you can take a shot at them. CVNA has been a great performer through the year. They're the, buy your car on the internet company, car vending machines. We can see here we had a gap up from 170 up here to 200, and now we've had a cluster of candles just levitating here, and now prices come back to test the 50 EMA in green and the top of gap support. I think this is a real nice setup for alarming 200. If you lose the 50 and you lose gap support at 200, you got the opportunity for a $30 gap fill. And if this gap's down today, you would have a bearish island cluster here at the top with gaps on both sides. So I think that is a nice setup. Now remember, on all these, no trigger, no trade. You got to get the break before you can take the trade, because we are at support, and support is support until it's broken. So remember that on all these setups. GW Pharma, they say you're supposed to buy support and sell resistance. If you had done that back here, 95.95 worked out pretty well. If you bought it here, did really well, got up to resistance at 140. If you sold resistance, you did really well. Now we're back down at 95, spending over a week sitting at that level. You got 1 or 2 choices. Well, you always have 3 choices, and one of those being not to do anything, but let's leave that one aside. You take your long, you set a stop just below, say $1, $1.50, whatever you're comfortable with. So you risk $1.50 for a potential run to 140. That's great risk reward. I don't have it penciled in here, but you can see there's an open gap from 120 to 130. You got a $10 gap in there. So you buy support. When you get up to the top, you sell resistance. Now, what if you get stopped out? Then you've got to consider reversing your position, because below 95, there's not a lot stopping it to going back to the March lows. So if you get involved in the name, don't give up on the trade if you get stopped out. Instead of being pissed off that you lost $2, take a look and see if that failed long idea turns into a compelling short idea. And that's the nice thing about finding these key levels, that you can often flip your trade and do really, really well. KWEB, this is a name our subscribers got long yesterday. KWEB is the Chinese internet ETF. It's been in this $8 range for 3.5 months. It is now just broken above resistance, and we've got Alibaba JD.com, Tencent, what are the other ones? Baidu, Trip.com, all reporting in the next couple weeks. I think Baba and JD and Tencent are all going to do really well. And so I'm taking the view that earnings will be positive and positively rewarded, and we get a push higher. The $8 range targets a measured move of $8, which would bring us up to 80. What would be a stop? I've set a stop at the trailing 20, which is at 70.50. So I'm risking 2 to make 8. Let's put it that way. So you can set your stops a little different if you want to. But looking at the indicators, we've got a breakout on momentum, and we've got a breakout on RSI. So triple green light, positive indicators, and positive price action. I like that setup. And I like ETFs that you can, if you have a view on a particular sector, you can hold them through earnings and not have that single stock risk. If Baba, gaps down, we will certainly feel it here in KWEB, but not as much as if you'd have had Baba, and that can wipe out your position, like Netflix last night wiped all those people out with one shot. So there is a lot of risk out there to holding through earnings. TLT 158 is your line, and that has held. We had a breakdown in June, which was recovered, and now we're testing it again. If the cyclical recovery takes hold and any element of inflation takes hold, this will break. But key support is key support until it's broken. It's just as an objective a trade to say, you know what, you buy support, you don't sell it. So taking an objective long here, you'd be looking for a bounce up to say 182 at this downtrend resistance. Now for me, I do have a view, and that is RSI is bearish, PPO is bearish, descending triangle is bearish. I'm going to sit and wait, and I have 158 alarmed, and also notice the 200 comes in right there as well. So if it loses key support, lateral support, and the 200, you're getting a flash move down to 152, and I want to be ready for that, because once you're on board that trade, then you can either cover here at 152 or roll your strikes down, because if 152 were to break, then you're looking way down in the 140s. So lot of reward to the downside if the level breaks. So that's something to alarm. LabCorp, fresh breakout. I like this long against like 202.50. If it makes a new high, you got to buy. That's my motto, and I think that works really well. Set your stop just below. And on the blog site in the write-up, if you go back and look at the weekly and monthly chart, this is a level that's been tagged before, years back. So if price can hold this breakout to the end of the month to get a new all-time monthly closing high, that would be significant, and you're looking at a lot more upside than $20 at that point. Then you may be looking at something much more substantial and significant. So I like the implications there, But first things first, got to hold 202.50 or it comes back. But all the EMAs are bullishly aligned. I like the setup. LGND Pharma is at a key spot. Big rug pull off the top. Came down to this well-defined level and bounced, and now we're right back to it. And if you followed along for any length of time, first move into a level usually holds and you usually get a bounce. Second time, much higher probability that that breaks this time around. And if it does, targeting the March lows, which are way down here. So may get a little bounce here. Certainly objective to take it long, but I think the risk reward for a potential move down to 65, 70 outweigh the short term potential for a small bounce here. So I'm leaning on waiting to see if that breaks here in the next day or so on LGND Pharma. Southern Copper, falling dollar, cyclical recovery, copper on a fresh run. Southern Copper is one of the big producers along with Freeport FCX. Fresh breakout on RSI, PPO above zero but a little weak. I would like to see that a little stronger, but 2 out of 3 ain't all bad, especially when one of them is price. So I like this long against 48.50, looking for a move up towards 55. Halo, breaking out of a well-defined $5 trading range, breakout on RSI, breakout on PPO, breakout on price, targets a $5 move, targeting 35 with a stop just below 29.50, 29 and a quarter, 29. If it comes back into the box, that won't be a good sign, and if it does that, I would exit the trade. It's got to be right or right out on this one, outside the box. Last one, Bloom Energy. It's in that alternative energy space that has been doing really well. Consolidation range, breakout, back test. My default position here is go. Breakout, back test, go. And we've also got this uptrend line acting as support as well. So I like this long against wherever you want to put it, 18, 17 and a half, right there. This should find some acceleration over the next couple of days. So I like that one long. So last but not least, there were some good gaps yesterday. IBM, Logitech, Crown Holdings, I think it's Crown Castle. Netflix, of course, gapped last night, so that'll be, a setup for tomorrow on a bracket trade, and also PXD gap down. So we've got some gap ups and some gap downs to work with. If you want to set up bracket trades on that for today and the days going forward, that would be great. And lastly, I want to mention, as good as these setups may be selective and keep in mind where we're at, both, on the calendar and broad market wise, and volatility. I mean, the VIX is pushing 30. We're 2 weeks out from an election, and I have no idea what positions you might have on. This is not a time to go fire off, 10 positions at the bell because they all look like nice setups. Be selective. Keep your number of positions to where you can manage them well, and monitor your overall exposure, keeping in mind that volatility is elevated and there are 2 and 3% days out there ahead of the election and beyond. So don't get too far out over your skis. But that being said, I hope you find something in the list this morning that intrigues you, either to put on a watch list for the days ahead or to take a trade today. If you're new to the channel and you like the content, please hit the subscribe button and the alarm bell. You'll be notified of all my content going forward. You'll find links to the blog site where this post will be, and other posts that aspiring traders at all levels will find helpful. And there's also a link to register for all my content. You'll get an email each and every day when I publish new content, and you'll also get an invite link to our trading room. So I hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.